All right, let's dive into a topic that, believe it or not, affects every single one of us in India, whether you're running a massive company or just buying your daily groceries. We're talking about taxes. Now, I know it can sound super complicated, but it's literally the financial engine of the entire country. So let's get into it.
You've probably had this thought, right? You see that chunk of money disappear from your paycheck, or you notice that extra charge on a bill, and you think, where is that actually going? Well, in this explainer, we're going to do exactly that. We're going to follow the money and really map out how India's tax system works. So, here's the game plan. First, we'll tackle the big why taxes even exist. Then, we'll look at the two main ways the money flows in. We're going to zoom in on two of the big ones, corporate tax and GST. After that, we'll get into what your rights and responsibilities are as a taxpayer. And finally, we'll look at the big challenges the system is facing right now. Okay, first things first. Why do we even pay taxes? Seriously. Well, if you think of the entire country as this massive, complex machine, taxes are the fuel. They're what keeps the whole thing running, powering everything that needs to get done. To put it really simply, taxes are the government's main source of income. That's it. Without that money coming in, there'd be no way to pay for all the essential things that we often take for granted, the services and infrastructure that shape our daily lives. And this is where it all becomes real. That abstract idea of tax money turns into tangible things. We're talking about the roads you drive on, the airports you fly from, it's public hospitals and schools, it's the subsidies that support farmers and the programs that create jobs. Heck, it even funds our national defense and efforts to protect the environment. It's all powered by taxes. So we know why the money's collected. But how does it actually get from all of us to the government? Well, the system is basically built around two main streams, or as we're calling them, two tax rivers: direct taxes and indirect taxes. Here's the main difference, and it's a big one. A direct tax is put on your income or a company's profit. You pay it straight to the government. You can't pass that burden on to someone else. But an indirect tax, that's levied on stuff, goods and services. The business pays it initially, but then they just add it to the price, so you, the final customer, end up paying for it. Yep, it's all in the name. It's a direct line. When you see income tax deducted from your salary, that's a direct tax. And when a big company reports its profits for the year and pays tax on it, that's a direct tax too. It's a straight shot from your, or their, pocket to the government. Now this one, you see this one all the time, every day probably. That little extra GST amount on your restaurant bill, your movie ticket, your phone bill, that's an indirect tax. You aren't paying the government yourself. The shop or company you bought from is collecting it for them. It's basically a tax on spending. Okay, let's zoom in a bit and look at two of the heaviest lifters in India's entire tax system. Corporate tax, which is a major direct tax, and GST, the absolute giant of indirect taxes. So for companies, it's not just one flat rate. The system is tiered. Domestic companies that have a turnover up to 400 crore rupees pay a 25% tax rate. But if they're bigger than that, the rate bumps up to 30%. And for foreign companies that operate here in India, the rate is higher still at 40%. And then there's GST. You really can't overstate how huge this change was. Before 2017, India had this incredibly complicated web of different taxes. VAT, service tax, excise duty. Oh, the list was long. GST came in and just swept all of that away, trying to create this idea of one nation, one tax, and a single unified market. Now, GST isn't just one single rate either. It's broken down into different slabs. You've got essential stuff like fresh milk and fruit that are exempt, zero tax. Basic household things fall into a low 5% slab, and then as you move toward more processed goods, services, and luxury items, the rate climbs, going all the way up to 28% for things like luxury cars. So, you might be wondering, how does GST avoid that problem of a tax on a tax? Well, here's the clever part. It's a system called input tax credit. Basically, at every step in making and selling a product, a business can get a credit back for the GST it paid on its raw materials or inputs. This is huge because it means the tax is only applied to the value added at each stage. It stops prices from spiraling up.
The tax system isn't just about the government taking money. It's supposed to be a relationship, a kind of two-way street. There are rights you have as a taxpayer, and there are responsibilities you have to uphold.
So on one side of that street, you have a fundamental right to be treated fairly by the tax authorities. They can't just be arbitrary. And critically, they have to keep your financial information private and confidential. And on the flip side, what's your part of the deal?
To be honest, it means being ethical in your dealings and making sure you disclose all your information truthfully without trying to hide income or fudge the numbers. Here's another really important right. If you happen to overpay your taxes for the year, you are absolutely entitled to get that extra money back in a timely refund. It's your money after all. Which brings us to the most basic responsibility of all. Just doing it. The whole system really relies on people filing accurate tax returns and, of course, paying what they owe on time. It's the foundation of the whole thing. Now, let's be real. While the system has a clear structure, it is far from perfect. There are some pretty significant challenges that India is grappling with as it tries to build a better, more efficient tax system for the future. First off, it's just so complex. For an ordinary person or a small business owner, trying to keep up with all the rules, the different layers, and the constant changes can be a total nightmare. This complexity isn't just annoying, it can actually make it harder for people to start and grow businesses. The next one is a huge one, tax evasion. A massive part of India's economy is informal. It runs on cash and operates off the books, and that makes it incredibly difficult for the government to track transactions and collect the tax that's due. That lost revenue means less money for all those public services we talked about. And finally, there's a really modern challenge, the digital economy. Think about it. How do you tax a global tech company that makes a ton of money from Indian users but doesn't have a physical office here? The old rules were written for a world of factories and physical goods. This new digital world is forcing everyone to rethink what's fair and how to make it work. And that really brings us to the million-dollar or maybe trillion-rupee question. Solving these massive challenges, the complexity, the tax evasion, the digital puzzle, is absolutely key to India's future growth. So, as our economy keeps changing at an incredible pace, the question remains, how can we build a tax system that isn't just functional, but is actually simple, fair, and truly ready for the future?